So hey guys, what's up? Welcome to another video. Today we're talking about finance. Well, as simple as it sounds, let me define it in a more simpler way. Finance is basically dealing with money. But something that bothers me is we millennials are not giving much importance to this and we continue to ignore this. But why? We all want to make money, but we don't want to talk about how to make money or how to manage money. But since when did we start getting inspired by TV series, dude? Whatever, let the bygones be bygones. Finance or money is not bad. They are the tools to get through this capitalism era. Without understanding this, you'll probably have a tough time unless you can afford a CA for every chips packet you buy. But even after considering that, it's good to know some basics. The three most important things everyone needs to know is investment, loans and taxes. These are the most important three things that everyone encounters at some point of their life. Well, dealing with all this can be summed up into two words: personal finance. Learning personal finance can be a boon in disguise. The earlier, the better. In this video, I want to start with the most fundamental thing: investment. The four kind of investments that I want to talk about is: number one, most important and known for its shadiness, stocks. Two, the safe and pretty sounding bet, bonds. Bad joke. 3. The big bucks market with overly saturated number of people, real estate. The go-to investment for keeping your money safe, cash or FDs. All these investments forms your portfolio. For rich people, portfolio is more like a part of business, property, part of hedge funds, etc. On the other hand, people like me can have stocks, bonds, bank balance, coin box, FDs. Probably there are more, but these are most of it. One of the most important aspects of personal finance is cash burn and cash flow. Cash flow is the amount of money that gets deposited in your account irrespective of how efficient you have been this month. Cash burn, on the other hand, is how much money do you utilize every month for your daily and monthly needs. Needs, not Netflix, okay? Needs. Now that we know a bit basic about the personal finance thing, let's understand the four investments: stocks, James Bond, real estate and FDs or cash. First, stocks. Look, stocks are not as scary as they sound to be. Okay, a bit.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Okay, sometimes the market volatility and people's judgment surely plays a role here, but it is surely something that most of the people can consider having. Let's clear what a stock is. Let's say you're Ambani bhai. I am an investor. Give me a bit of your company. I'll pay you this much. That is your stock price. I take a part of your company. I keep it with me. And you take the money, you use it for your business. When I say, okay fine, I'm done, I just want my money back, I give you the part of the money back, that is the share, and I take back my money. Now, if the money has grown, that's the profit I've done. If the money has fallen, respective to at what time I've taken it, when the market was up, there are much more factors, but on a simple term, that's how it is. You take a part of the business, and when you sell it, if you sell it for a profit, you make a profit, and if the market falls or the company goes down, you make a loss. The risk you're taking here is the collateral you're paying for the profit or loss you make. I would love to make a more informative video on this topic, so tell me in the comments if you want me to do so. Number 2, bonds. See, bonds are much more simpler, okay?
Bonds can be something that is
That's it. Okay, I'm kidding. Bonds are basically loans you give to the company. The companies are like, you know what, I don't like the name loan. Here, take a piece of paper. This is called as bond. Take it, enjoy it. And you're like, wow, bond, oh, brilliant, amazing, let's just have it. That's about it. Bonds are comparatively safer. Most of the times, it's just about the risk you want to take with the kind of bond you're investing in or the kind of bonds you're buying. So it completely depends on you. Number 3, real estate. Properties are basically appreciating assets. Most of the times, appreciating asset is you buy something for this price and it increases after a certain amount of time. So it has increased in value. So that's an appreciating asset. Well, the vice versa is depreciating asset. For an example, you buy a house in Bangalore for 50 lakhs, you rent it out for 15,000, you let the rent that you're getting from the house repay the mortgage you have, and after the amount is paid by the rent, that is going to take a lot of time. So you own a property, it's an appreciating asset, and once you feel like, okay fine, you know what, I need the money now, so you just sell the house, you make back some, considering the fact that the prices have grown since then, and you can sell it for like 60 lakhs, and sometimes it's more. The more you make, the merrier you are. As simple as that. Things that come under real estate are land, house, apartment, real estate funds, etc. Number 4, cash and FDs. The most used form of investing and the most safe. I said most. Savings is nothing but you just keep a small amount of money that you have aside, saying that this is not mine, I'm just going to keep it for a less percentage of interest for an FD, or you just keep it in cash, which is not pretty suggestible. You just keep it aside, saying that this is my savings, I'm going to use it when I want it. Right now I don't want it, so I'm going to keep it aside. So you build up on that savings, you have a small amount of interest coming in, and that's it. That's your cash or FDs. The problem here is money is actually not growing. The most fundamental reason why you invest is that your money grows, not just stays in a stalemate position. You want it to grow for itself. You want your money to work for you. That's what the idea of investing is. Cash and FDs are a pretty good option, unless and until you want to keep it safe. That's it for this video, guys. I really look forward to making much more videos on finance. As I've said before, there are going to be lots and lots of content coming on this channel. So if you like this video, make sure you hit the like button, subscribe to this channel, share it with your financially illiterate friends, and tell me in the comment section what you want to see next, or what kind of doubts you have, or anything like. I mean, anything, okay? And the reason why this is coming out on Sunday, the major reason was I was working on something really interesting. So I have a website that we started together. I started with my best friend, that is balloftech.com. You can just go and check it out. I've linked it in the description below. It's in my link tree. You can go and check it out. It's basically a tech blog where we're trying to make tech simpler for everyone. So basically it's for everyone who can read. We have pretty much tried to simplify it as much as we could, and I know there are a lot of changes that we have to make, but I think this is just a good beginning for it, and go and check it out, balloftech.com. I'll see you all in the next week. Until then, Jai Hind, Vande Mataram. Happy Independence Day, guys.